Check my levels, check my levels. 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 All right, now we're rocking, baby. Ladies and gentlemen, welcome to Trades by Bren. I'm Bren. How you doing? We're looking at the SP 500 futures. Notice the CPI report was right here, okay? I drew a line before I went to sleep, and as you can see, oh, major bull breakout. Major bull breakout, okay? Now, this is one of the advantages of having been doing trading for a few years now, right? I can, before I go to sleep, I can know what's you know, what are the important times when things are going to happen. I use something called Financial Juice. That is a website. Okay, so you can just go to Financial Juice and it'll tell you what important reports are coming and what time. So 6:30, the consumer price index. This has to do with inflation, right? So big bull breakout, exploding to the upside. Now we're already at all-time highs. Okay, so I drew this yesterday, and this is the daily chart. Okay, so have a look at this. Okay, this is the daily chart. Each candle is 1 day. So notice that we had a strong bull breakout, 290 points. This is a leg, right? They call this a leg because it's bars in a consecutive direction. So that's very strong, okay? Notice that there's one small bear doji. There's two small dojis here. But other than that, you've got very strong bull bars, consecutive bull bars, growing in size. This one's bigger than this one, right? This one's equal in size to this one, more or less. So very strong, very strong, very strong. Now, right, that's right near the all-time high. Now, at the all-time high, we did come down a little bit, so that's a pullback, but this ended up being a wedge bull flag. And a flag is where there's a pause and a trend, and then the trend continues. So if you say, and then it's a wedge because there's 3 pushes down, right? That's one leg down, okay? This little small leg down was here, okay? And then right there, okay? So that's one leg down, and then that's another leg down, okay? So that's 2, and that's a third leg down. All right, so that would be 3, okay? So a wedge is essentially a triple bottom, okay? So that's your triple bottom. All right, and then what happened? We start getting another breakout here, okay? Starting here. Now, what happened today, at least this morning, right now, is that we're exploding to the upside. So what I'm looking for in particular is what happens when we go about this distance, okay? Because I like my measured moves, and the market moves in equidistance moves often, okay? So if we draw a measured move of this movement, okay, of this bull move, then that would put us up here, okay? So bottom line, you want the simple version? We're bullish, baby. That's it. We're bullish, okay? So that's the short version. You want the short version? We're bullish. Now, we've got the FOMC report. Today's a big day. And we've got two big reports coming in. So Jerome Powell, chairman of the Fed, will be speaking. So there's going to be a statement that's released at 11 Pacific, and then there's also a press release that's going to happen after that. So today could be very interesting. Okay, it's already very interesting because we've got a bull trend from the open, right? Yeah, this happened at at 5:30. Okay, and this is a very strong breakout. Okay, so what happens when you get a breakout like this is all the bears that were short, everyone that was short the S&P, they're trapped, right? All the bears that had short positions here, excuse me, they had to cover and they had to exit their shorts. And so bulls are already buying, and then the bears get trapped, bears have to panic out, and that shoots the price up, and that's how you get a strong trend like this. So, and we're already above all-time highs and the high of yesterday, because yesterday we made a new all-time high. So bullish already going into the close of yesterday. And then today on the open, because of the CPI report in particular, massively bullish. So we are just strongly bullish. But the problem when you get price action like this is that it's usually not sustainable, okay? So a lot of times we'll go up and then we'll retrace a lot of that move, if not all the move, okay? So we could easily come back down right to here, okay? And when a catalyst, like a report, is behind a big move like this, it usually gets retraced. I've seen this so many times. That might happen, that might not, but it's pretty common. Also, we have three pushes up now, okay? So that's a wedge top, another triple top, right? However, bears are absolutely doing nothing. Bears are doing absolutely nothing, okay? So we're long and we are trending. I tend to wait though, because look where we're at. We're 13 points above the average price. So that's saying I'm willing to pay 13 points above the average. And it's not a good idea. As a trader, it's not a good idea. If you're a long-term investor, it's not a problem, right? Because you're going to be holding for 10 or 20 years. But I'd rather wait till the market touches the moving average, because it always touches the moving average. The price is always coming back to the moving average. So I'm going to be patient here. Also, when you have a day like today, when you got multiple catalysts, potential catalysts happening, right? Like, you can be patient, right? There's no rush, because there's going to be more movement, more big moves. We know that. Okay. So that's the technical analysis for today. When my music just does not sound good. Ah, I see what's happening. Ah, I see what's happening. Okay, music's back. Cool. It's weird that it cuts out like that sometimes. Let us know where you're streaming in from. Let us know your name and where you're streaming in from in the comments. Shout out to my man Ridicules from. Shout out to my man Ridicules from Canada. Shout out to my man Philip from Poland. Welcome back, Philip. Let's measure this. 58-point move. Okay. 58-point move. If you are long here, if you're long anywhere in here, you're making money. So one of the most important things to pay attention to is the opposite side. Okay. So if you're bullish, if you're a buyer, good vibes, Philip, good vibes. Exactly. If you're bullish, right? Like let's say you want to buy because this is bullish. Why wouldn't you? Okay. One of the things to pay attention to, maybe the most important thing to pay attention to is what's the other side doing? How strong are the sellers? If you're a buyer, how strong are the sellers, right? The short sellers. So one thing you can do is just measure, okay? So this is a move up. This candle, this candle, this candle. 3 consecutive bull bars, 38 points. Now let's measure the bear move. 38 points versus 6. That's 6 points. 38 minus 6. Who's winning? Obviously the bulls. Let's try it again. Okay, how about this move? 12, okay, minus 8. Okay, that's 12 here. Okay, that's 8. Who's winning? Still the bulls. Okay, try it again. 15 points. Okay, these 3 candles, bull bars are 3 candles. 15 points. 1 bear bar, 6 points. Okay, who's winning? Obviously, still the bulls. You guys see the point. So relative strength is what we're talking about. Okay, so that's important because it tells you how confident you can be in your position based on the data, not based on your feelings. And as professional traders or aspiring professional traders, we are breaking the habit of using hope. Okay, we don't use hope for shit. Okay, no. We use data. Okay, and the data is really easy to collect. Often, just measure, right? Measure. How far do we go in one direction? How far do we go in the other direction? There's only 2 directions, up or down. That's it. That's something I wish someone told me when I started trading. Stuff like that. It's safe to buy still, but we could reverse at any moment and we could reverse strongly. So, I mean, that's always true. Let's take a look at a 2-minute chart and see what's happening. Okay, same thing. Right, there's your wedge. This is probably strong enough to reset the count. So that, yeah. So we'll probably get at least a measured move with that, right? So we'll probably go there. That's my guess. And why do the bulls keep pushing the price? It's because the bears are trapped. Basically, the bears have no reason to sell. Why would you sell here? There's no reason to sell. It's just strongly bullish, and the higher up it goes, the more momentum the bulls gain. Although once you get to a certain level, then it becomes a tipping point because then it becomes too expensive, right? Because as I said, we're 13 points above the moving average. Now 14. Okay, so like once you start getting 15, 16, 17, 18, 19, 20 points above the average price, then some of the bulls are like, they'll stop buying because it's too much. And that's when you get, well, often what happens is you get a climactic end of trend. So bulls will buy, push the price up, a final explosion to the upside, and then it'll reverse, right? So oftentimes you get one final blast at the end. You guys know about that? Trends usually have a climactic end. Not always, right? But it's pretty typical, right? Like this. This is a trend, right? So we went up. This was yesterday. Went up, sideways, and then we went up, and then this is what I mean by a climactic end. Okay, it's not that climactic, but notice that the trend ended with a 15-point push up. Okay, so you call that a climax. Now that we're looking at the regular trading hours, it's a little more clear. Now, regular trading hours we're looking at now, and before we were looking at the ETH chart. RTH chart, regular trading hours, were 26 points above the moving average. Tough to buy that, but we are trending. And the bulls are still buying, look. Small pullback, bull trend, right? Small little pullbacks, bull trend, bull trend, bull trend. 5-minute chart. 1 leg, 2 legs, 3 legs. So essentially what we're doing now is we're waiting to see where the line is for the bulls. Another thing to consider in a strong trend like this, that's trending from the beginning of the day, from the very open. Is have we touched the moving average yet? We haven't. Look at that blue line. We've been above it since the open. We haven't touched it yet. And helpful statistic, there's a 99% chance. 99% chance that we will touch that moving average. Okay. Now that moving average is 27 points below. Okay. So if there's a 99% chance that we're going to touch a moving average, then that means there's a 99% chance we can get a better price. So it makes sense to wait, doesn't it? Another option is you can buy below something, right? Like we could buy here. Below bull bar, right? It's a vibe. Good vibes, Philip. Good vibes. Bitcoin. I saw a short position here. This guy, short scalp, right? So that would be a short on the close of that candle for a measured move down. Okay. That's the scalp. Entry. Entry. Exit. Entry, exit. Dude, that's a much better way to do those arrows. Entry, exit, right? And now look what's happening here. The bulls found buyers down here. Where? Let's see. Okay, right here where the price broke out. So this is a breakout, and look, we came down to test the breakout point. Okay, commonplace. Market's always testing those breakout points. Now, the price broke out here. Price came down to test the point where we broke out, and then bounced. Okay, so that shows bullishness. That's like testing the strength of the trend. And if the gap stays open, because there's a gap between here and here, right? We tried to close the gap. Okay, and if you consider the breakout point here, the breakout point was actually here. Okay, because you had a triangle and then you had the breakout here. So technically this is the breakout point. So there's still a gap between here or here and here, right? So we didn't close that gap. We tried to close that gap. We tried to close below the gap, but we didn't. So that means there's now a gap here, which shows bull strength. And look what's happening. Price is exploding to the upside. So we essentially broke out to the upside, broke out to the upside again, went sideways all in here, came down to test the breakout point, and now we're breaking out to the upside again. So that's Bitcoin, bullish at the moment, bullish at the moment. Candle number 13. First doji. First doji. First doji. What does that mean? It means the momentum's slowing down. We can very easily come down and test the moving average at any moment. So bulls bought a tick above the high of 11. See that? This is candle 11. There are buyers above 11. That's why there's a tail. Let's see where I would have bought if I was here earlier. Probably here. Yeah. I think that'd be the buy. You know, there or there. Put your stop there. It's a great trade. 4-point risk. And then what? You go for that measured move, right? So I'd still be holding. Excuse me. What? A lot of trading is waiting. What kind of patience do you have? What kind of resolve? How willing are you to wait? This is a question this trading game is asking of us constantly. How strong is your resolve? How strong is your resolve? How easily can you get pushed to doing something or pulled into doing something? This is what trading asks you. Are you the type of person that's comfortable living by your own rules? Operating on your own intentions? Or are you the kind of person that can get easily swayed? That's what trading asks you. What works? What works in trading? Navy SEAL like discipline. That's what it takes. Every day is an opportunity for you to practice better discipline every day. Every single day. Come on. I'll give you an example. When I was less experienced, right? I would see a trend like this. Clear trend, obvious trend. Consecutive bull bars. Bears trapped. Bears not doing shit. Bulls in complete control of the market. And I would go, fuck. Just buy. Buy. Right? And I wouldn't even look at the average price. And I wouldn't even get context. I'll just say, I'll just be impulsive. That's how I used to be. FOMO, basically, right? I'd be like, the move's happening. I got to get in. And then even though I'm entering late, I'd be like, fuck it. And what I would do is in my mind, I would just say, well, if it's going up strongly, then of course it's going to keep going up strongly. Stupid. That's a silly way of thinking because it's one-dimensional. Trading is a two-dimensional game. You got bears and bulls. You got buyers and sellers. I didn't understand how to understand the other side of what I was trying to do. I could barely understand one side, right? Bulls. I could, for me, it was an accomplishment to be able to look at a chart and just to understand what I was seeing from one perspective. So I would see a trend like this, like we're looking at right now. And I go, oh, bullish. And I would see one possibility and one possibility only, which was trade with the trend, market's trending, therefore buy, because it's a bull trend. That's silly. That's silly for two reasons. One, the market's filled with an abundance of opportunities. The market is filled with an abundance of infinite opportunities. It's a constant parade. It's a constant parade of opportunity. So FOMO is irrational because you're never missing out. You can't ever miss out. Impossible. So that was something that took a lot of practice to kind of wrap my head around. But also the other reason is I didn't understand that the further and further we go in a direction, the more overbought the market becomes. And the more reason to sell, the more reason to sell. So the higher we go, the more appealing it is for the bears, because then the bears have less and less risk, if that makes sense, right? In other words, if I'm a bear and I sell here, maybe my risk is up here, right? Because it's likely the price is going to move up more. But if I wait, instead of buying here, and I wait till we go 13 points higher, and I buy 13 points, and I sell rather 13 points higher instead of selling here, then maybe my stop can be half of what it needed to be if I sold here. Okay. So when you wait, you get a better, you get a better trade because you have less risk. And I didn't understand risk. As a trader, you have to understand risk. And if you're new, well, that's probably the last thing you're interested in. You're probably only thinking about making money. And you're probably only thinking about the direction of the price. You're not thinking about risk. But keep trading. See how long that lasts. See how long that lasts. See how successful you can get never thinking about risk or never thinking much about it. The market will teach you real quick that that is a thing you cannot ignore. And if you ignore it, you will get punished brutally. For example, when we started the stream, you know, the market was up here. If I would have just bought there, we already would have retraced the entire move and I would have been going in the negative, right? So I was smart enough to wait. And I think that's what happens with experience. You just get smarter and stronger. Smart enough to wait. That's going to be the phrase of the day today. This is a question for all traders. I just like smart enough to wait. Let's put it that way. Smart enough to wait. Testing the 4 high. 7 high, actually. Okay. All right, so that's reasonable. 2-minute chart. Touching that moving average. Switching to the 1 minute. Let's see how this closes. Okay, price wants to go lower. Okay, bouncing. Bouncing fast. Two consecutive bull bars. Wow, that was quick. Bouncing off the moving average. 3 consecutive bull bars now on the 1 minute. Let's switch back to the 2 minute and have a look.
Told that young kid I need a banger.
Okay, and we're in 1 tick above 39. Let's watch this on a 1 minute. I mean, in the 5 minute rather. Going for a scalp. 5 points. One to one risk to reward ratio. So 5.75 risk. We just go 5.75 profit target. We can probably move that, tighten that sub up a little bit. But we'll probably go sideways here. 39 seconds left on the candle. The way this closes will tell us something. We want to see it close above this candle right here. Ideally, we want to see it close above this guy. The minimum is we want to see this close near its high here. So we want a very small tail or no tail on the top of 16. So let's wait and see. 9 seconds left. 8, 7, 6, 5, 4, 3, 2. See if the bulls buy into the close. They did. Okay, good. So that's good. That's good. Bear selling. Let's see if we find bars below here. Might need to test down here. Or even down here. If we get stopped out here, all good. We will just wait and reevaluate and reassess the strength of the bears. Okay. Reasonable to expect bears to get a second leg down because 13 and 14 is strong. Right, so this is what's happening now, most likely. But we found bars below here. There were bars down here last time. There were bars down here last time. So I'm long because I think there'll be bars down here again. But maybe not. We'll see. Either way, going in with small size and a small stop. So no sweat either way. If the market trends on the open as it did, that's a trend from the open, right? That's bar one. Boom, we just shoot up. Usually go sideways for a while after, right? So we can usually expect a minimum of 15 15 bar trading range, sometimes more. Bear selling, 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 selling. But will we find bars below 16? That's the question. If we find bars below 16, we're good. If we don't, we're stopped out. Either way, all good. Right. No one likes losing, but whatever. It's part of the game. Okay, so far bars below 16. Okay, more bars. Sellers coming back. This does not look good for the bulls. The bulls holding the price, keeping the price from going below 15, but bears gaining momentum, and it looks like they'll get a strong close here. 30 seconds, selling, 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 selling. Notice into the close, bears selling, 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 selling. Okay, so accelerating to the downside, right? Which makes this more of a sell than a buy. But you never know. You just never know. And I don't move stops, right? So, right. So we take that on the chin and we reassess. So let's wait and watch. I do think there'll be buyers somewhere here. Might be right there. Fair channel. So one thing you can do is draw a line and just wait for that line to get broken. Okay, so that's your bear trend line, right? So we can just draw that and say, okay, until we cross that line, we're bearish. Testing the 6 high again. Right, we tested 6 high here, came back to test it again. So the question now is bears, can you get follow through? Remember, we're measuring, right? So this move up is such a helpful tool. So this move up from here to here, okay? That's 14 points, okay? Now let's measure the bear strength. 11, okay? Now let's see. Let's see if the bears can keep it going, right? To compete with the bulls, well, the bulls got, you know, let's think of them like points on a scoreboard. The bulls got 14 points here. Bears are like, nah. So then they got 11 points, right? They're like, fuck you, bears. Fuck you, bulls, right? And the bears got 11 points. Now let's see if they can keep this streak going. So measuring streaks is an easy way to assess who's winning, who's in control, and what position you could take, long or short, right? Weird. Very weird. So that the last time the bulls got a bull bar, right? The bears sold it. This is a weaker bull bar. So why wouldn't the bears sell that again? Hesitation. Remember, I was expecting bars below 16.
BeatStars.com.
Oh my god, it's the sound engine.
Also, let's measure the full length of the move and see if we're at 50%. Just above 50% pullback.
BeatStars.com.
God, that's annoying, huh? I love this beat, but ugh. Can't take it. Two-leg correction. Two-legged pullback. This is one leg, sideways, two legs. Okay, one leg, two leg. One leg, two leg. Bulls trying to get consecutive bars, 18, 19. That. If you've watched my how to draw trend lines tutorial, you know my method is to draw the trend line with 2 points, 1, 2, and then watch the reaction price to line. So what we're going to be doing is we're going to be watching right here. Okay. We're going to watch the reaction price to line right there. We're going to see how the price reacts to that line. And one of two things are going to happen. They'll either be buying or selling. If they're selling, that's bearish. If there's buying, that's bullish. Not good for the bulls. I mean, good for the bulls in the sense that we've got 2 consecutive bull bars. But how much conviction does that show you on behalf of the bulls? I mean, 19's a doji, so you had buying and selling. So it's not really, it's neutral. Good morning. Yeah, I'm good. Yeah. Let me know if you got anything, all right? Yeah, thanks. All right. Bulls trying to get a close above that trend line. Bears selling at the trend line. Okay, so we have to wait for this candle to close. Let's switch to a 2-minute and see what happens. Okay. Remember, connect, draw the line, connect 2 points, watch the reaction price to line. Selling at the line. Okay. Let's see how this candle closes though. This guy. This is what we're watching. And bulls buy. Interesting, right? $50 seconds. Let's see if they can get this candle to close on its high. Okay, this is what we're watching. Can the bulls get a strong close here? It's not looking good, right? For 30 seconds, let's see. Now let's draw another line. Because we got 2 points now, see that? So that's our bull line. So this is the fight. Bulls versus bears. It's kind of inconclusive, right? It's just a doji. You got buying and selling there. Now, we did get a close above the prior close, so that is more bullish than bearish, but let's see. Let's redraw the line here. Not enough for me to buy that. Not enough conviction. Let's just watch the 5 minute and see how we go there. Mm-hmm. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, so bullish, but oh, look at that. You see how this candle is smaller, the body of this candle, right? If we make it bigger, you see that body of this candle is smaller than the body of this candle. Do you see how these two candles are smaller, the bodies, than this candle? So that shows you that the bulls lack conviction, right? Because if they're growing in conviction, there'd be more buying and the candle body would be fatter. But we've got skinny bulls, which means weak bulls. Skinny bull bodies, skinny bar bodies equals weak bulls. Skinny bar bodies equals weak. Yes. Okay. So now what you can see is a failed breakout. Let's use this guy. Failed breakout above their trend line. Maybe the bulls get a double bottom here. Let's see. If I had to guess, I'd say we're coming down to test the moving average. Down here. That's my guess. Mark my words. Price wants to go lower, clearly. Shout out to my man, Real Media. Real Media with a question. What indicator do you use for your candlestick strength? No indicator, man. No indicator. I use my eyeballs. What indicator do you use? Eyeballs. Eyeballs by Bren. What indicator do you use? Real Media. The indicator I use is called Eyeballs by Bren. It's right here. It's free. Came with my came with my body at birth. Eyeballs by Bren. Yes. You guys want to check out my new indicator? Yeah, dude, I just look at the chart, man. You know, and in TradingView, you have a measuring tool. See this? Measure. So it'll just tell you, look, let's measure this bear candle. See that? 7 points. You know, about 7 points. You can just measure it. Eyeballs by Bren. My favorite indicator. Okay, I said I thought we were going to come down here. Okay, since we were up here, I said, hey, let's wait and see what happens when we touch the moving average, because I said at the very beginning of this broadcast, there's a 99% chance that we're going to touch the moving average. And look what's happening now. God damn it, this guy Bren might know some shit. This guy Bren might not be a complete idiot. Wedge bottom. So you see the channel lines, right? So when this happens, right, when we're pushing lower, but like in a really kind of like slowly drifting down is what's happening, right? When down, we retrace half that move. We made another move almost the same size. We retrace almost the whole move, right? So when we're doing this channeling, right, like this, it's easy to get impatient, right? But if we're going to get long, okay, we need some sort of confidence. Real Media. My indicator is called bar count, yes, but that's for the bar counter. Do you see the bar counter on the screen? Do you see how it's counting the bars? See, so it numbers them. Okay, so that's my bar counter. It's not telling me the strength of the candles, but it is telling me what number the candles are. And that's called the bar count and Brooks EMA. Okay, so you can get that in TradingView, which is the EMA and the counting of the bars. But for candle strength, I use my eyeballs and the measuring tool. Eyeballs by Red. Also, I was gonna say, if we want to buy, right? I'm interested in buying because this is bullish. I want to see a good-looking buy signal. That's kind of okay. That was a good one, so that's why we took that one. But unfortunately, that was a sell, not a buy, which sucks. So look, we're way more bullish than bearish. So there will be buyers somewhere, but it's like where, right? It's just we got to keep going lower to find buyers. And looks like we may have found them. See, that's what I'm talking about. As far as a buy signal, that's the kind of buy signal I want. Right, that looks more like this guy. 6.5 points. See, we came down here and then boom, 6 points. See, now we're buying into the close. 17 seconds and the bulls are buying. Boom, 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 pushing it up, pushing it up. We did not touch the moving average, but we got within 2 points. So that means there were buyers 2 points above the EMA. I still want to see a touch of that EMA though. Because who's to say the bears won't sell that? Right. That might be it for the pullback. We might get back to that might be the bull flag. Wedge, bull flag. 3 pushes down. Bull trend, so it's a flag. Trend continuation. Maybe. What's up? So if you're buying there's your trade. 5 point stop. Maybe you scalping. Okay, so 3 legs down. 1, 2, 3. 22 tried to push lower, touched the trend line because we connected those 2 lines, right? Again, connect 2 points. 1, 2, then watch your reaction price to line. These trend lines are amazing, guys. Look. 1, 2. Okay, you just connect those 2 points with this line here and then wait until we come down and touch that and see what happens. Watch the reaction price line. Notice, boom, bounced right up. Okay. Bull bar. So you go, okay, we had 3 legs down, so it's a reasonable buy. That I don't like. So I'm canceling that. I just don't like it. It shows you that they're sellers above 20. So that means we're in a trading range. Now, if the bulls get a bull close here, maybe that changes things, but better to wait. The mantra for today, smart enough to wait. We already fucked that up on 16, so. Let's have a look at the 2 minute. Oh, it looks good on the 2 minute. And look, we got to close above the bear channel. See that? You guys see that? I think it's a reasonable buy. but I'm not going to take it because you just see the bear selling here. Look at that. You know, if I'm buying, I want to see momentum picking up, not slowing down. You see the momentum slowing down here, so I'm like, nah. I think we got to touch that moving average. That must be it. That must be it. I want to see momentum picking up, not slowing down. Let's see if the bear saw this. What are you guys trading today? Let me know in the comments. What are you trading? What are you trading? What time frame? Post in the comments right now. So this is a bear channel. Okay, this is a bear channel, right? And if we're still in a bear channel, then the bear will sell here. I'd be interested to see what the measured move looks like on the Okay. Do you see that? Is that interesting, guys? Look. So here we're in a trading range. Then at 6:30 on the CPI report, I guess 5:30. Is that interesting? No. This was 6:30. Huh. Okay. Well, whatever. It happened at 5:30. Okay. At 5:30, you had this huge bull bar. Right? $30-point bull bar. That's a lot. 30 points up in one candle, right? In 5 minutes. And then look, you draw a measured move. So you just measure that candle, right? From the close to the close. 30 points. And then that puts you right here. And notice the price went got within 2 ticks of that. So we went an equidistance move of that move. That's why I like measure moves. Okay, cool. And this is awesome. So on the electronic trading hours now, we're finding support at the moving average on the electronic trading hours chart. ETH chart, right? Which, you know, gives us more reasons to be bullish, but shout out to my man Philip. He said he's trading silver and natural gas. Various time frames. What is BRENT? What is that? Bitcoin coming up to test the high here. I've got an indicator here for the all-time high. Right, if we get back up there, I'll be looking to get short. Okay, finding bars below 23. Crude oil, got it. British crude oil, okay. Bulls making no momentum, making no progress. Buyers here, but no conviction. So there's just no reason to be bullish yet, right? Same thing. Same thing here, right? Skinny bar bodies, okay? Strong bull bar, smaller bull bar, smaller bull bar, okay? Bulls losing conviction. Bulls have conviction, losing conviction even more. So safe to call this, it's fair to call this weak as fuck. But we're still just going sideways. Sideways and down. So if you're gonna buy, right, maybe buy below something, like what, buy below here, that's reasonable. Or sell, right? Failed breakout above the bear channel. Failed breakout below. Sorry, this is a triangle. Yeah, okay, channel and triangle. Okay, so here we've got a triangle. You see it? This guy, right in here. So the price consolidates. That's called a triangle. Price tries to break out, right? Tries to break out, fails, comes down, right? Same thing on the bottom side. So this is the bottom of the triangle. Price tries to break out, does, but only gets a few points below and then gets sucked back in, okay? So we're still very much in a trading range, and I've tested this like 100 times or more. When you get a bull trend like this from the open, the price very often goes sideways for 15 bars. That's an hour, 15 minutes, okay? So you can expect that in most cases, which means we can reasonably expect the price to go sideways to down until we get to this line. Okay, so on that understanding, maybe we take a sell. Okay. I wonder if you guys can hear that. They're doing construction at my house. It's not a good location for a sell either, because we're near the bottom of the trading range. Better to sell something down here. Okay, so there are bars below here. Maybe we buy here, right? Below 6. Or below, I don't know, 3. Or below 22. Maybe sell below 22. It's right at the moving average. Reasonable, because there were buyers here before. So you're just saying, I'm going to bet there's buyers down a little bit below there because there were buyers there before. There are buyers here before, so I'm going to bet there would be buyers a little bit lower than that. Right? There were buyers here. Then there were buyers here, which was a couple ticks below here, right? That's the low, and we went right to that low, maybe one tick below it, and there were buyers, okay? Typical trading range price action. I'm sitting here trying to put a trade together like, do I want to sell that? Could I have, but I don't like it. I'd rather buy low because we're in a trading range. Bathroom break. Bathroom break.
This has its own magic.
Remember when we came down here and we didn't touch the moving average? I'm like, I want to see us touch the moving average. Because there's a 99% chance that'll happen. So if we get down there and we don't touch it, you know, it's possible we come back down and touch it. Actually touch it, right? We're touching it at some point. We might have to go up first, but it just looks like the price is like trying to get there, doesn't it? Red line is the end of the 15 bars. It's not necessarily the end of the trading range, but it just so often the price goes sideways for 15 bars after a trend from the open. It's like relief, right? The market gets tired. If it wakes up and it just goes running, this is what happened, right? Price got out of bed and just ran up 28 points. And then the price is like, need a little nap, needs to take a little rest. So it takes a little rest for 15 bars minimum. It's very reliable. If you ever see a trend from the open like this, very often you'll see it go sideways 15 bars minimum. So we're approaching that 15 bars. So let's see what happens here. There were buyers down here before, right? There were buyers down here before. There were buyers down here before. The bulls just could not get followed through. See how big that move was. 5 points, right? So bulls are scalping. Okay, 8 points. So they made more gains there. I think that was 6 points, right? Yeah. Shout out to my man Begabel. And it's Bren. B-R-E-N, my friend. Where are you streaming in from? Ben. Baltimore in the house. Please get my name right. But it's nice to see you, dude. Welcome back. In the future, if I see a trade from the open, I might just wait. See a trade from the open, come back in 2 hours. It's not a bad rule. All good, man. All good. Praised by Ben. Okay, so I was like, maybe we buy here, right? Below this pull bar. If we're counting 15 bars, this would be the 15th. Three consecutive bear bars. Price trying to get to that moving average. We'll get there. We'll get there. Finally touching the moving average. Since we started the broadcast, I was like, you know what? We're going to have to touch that moving average. And here we go. Order waiting tick below 22. Couple ticks below the moving average. Notice we didn't even touch it. We came within a tick. Isn't that interesting? Going to have to go lower to find buyers. Finally touched the moving average. Can you imagine? And we're in. Betting on a bounce. Small bounce. Immediately in profit. Good sign. Wait for it. Hold. Patience.
How much more do you want from me? More. How much more successful do you want me to be? More successful. How many records can my records break? More records. But I'm the best. But are you a different animal and the same beast? What the does that mean, Kobe Bryant? You're welcome. What the is he talking about?
Patience is a virtue. One tick from our profit target. Got it. Yes. Feels good, baby. Feels good. Feels good. Get some dollar signs in the chat. Get some dollar signs in the chat, man. That's what we like to see, baby. Man, we're real patient on that one, weren't we? So patient. Guys, it's the kind of patience this thing requires. We waited. After that trade, we waited a full hour. Just waiting and watching. Real patient. Real patient. Just sitting here for an hour. Patiently waiting, man. That's hard to do. That's hard to do. Where's my Dave Chappelle? But we did it. we executed our strategy according to our rules and procedures. Let's break it down. This is a bull trend. This is a trading range. When you're trending here, you trade with the trend. So the entry would be here. Bull breakout, wait for a pullback, strong bull bar, buy, ride it up. Okay, so that's trending. But then after you trend, usually you go sideways for a little bit. So that is a trading range. And also we know if the market opens from bar 1 and goes up, we can usually expect in most cases that we'll go sideways for at least 15 bars. So if we're in a trading range, we want to buy low and sell high, which means we want to buy in the bottom range of the trading range or sell in the top range. The bears tried to break out above this line, but they never really could, and then I considered selling here, but I'm like, you know what? We're in a trading range. So selling near the bottom is not the move. What does my strategy say to do? My strategy says to buy low in a trading range, but we don't know exactly where the bottom of the trading range is. So buying low in this case means we buy below where there was buying before. So whenever we see a bull bar like here, okay, we say, well, in a trading range, there'll probably be bars below where there were buyers before. That's usually how it works. So I put my order here, okay? I also noticed that there were bars below here on 9, okay? So notice traders did the same thing. Here was a strong bull bar. So the reason why 22 happened is because there were bars below 9, okay? So I'm like, well, this is definitely an area where there's buying, okay? It's an area of support. That's another way of saying that. That's one data point. But in trading, often when you get multiple signs of confirmation, a confluence of different signs, that's really good. And that can make an even stronger case for what you're trying to do, for the trade you're trying to do. So not only did we have indications that there would be buyers down here from here and here, but on top of that, we also had the moving average. Okay, and notice we didn't get there here, right? On 22, we tried to get to the moving average, but we didn't get there. So I said, you know what? That's not a sufficient test of the moving average because we didn't test it. And based on my data, thank you to Dr. Al Brooks, the godfather of price action, I know that there's a 99.9% chance that we are going to touch that moving average. So could something else happen and could we trend continue and then maybe get back down there later? Yes, I've seen that happen. But most likely we're going to touch it and we're going to touch it some point soon. So we put together 3 different data points. One, there were bars below. So we're betting on bars being down here again. So that's data point 1. Data point 2 was we didn't touch the moving average yet. There's a 99% chance we're going to touch it. So that's data point number 2. And we're strongly bullish, right? So when we touch the moving average, it's likely to assume there will be buyers there because when you're strongly bullish, the first touch of the moving average, traders buy it. That's how that works. Same thing if we're bearish. First touch of the moving average, there'll be sellers there waiting to sell because there were sellers on the sidelines this whole time saying we're going to wait for a pullback that's sufficient. And once they got that moving average touch, then they started buying, and that's what's happening right now. So there's 2 data points there. There's also a third data point. The third data point is that we went sideways for 15 bars, and that's very likely to happen after we get a trend from the open. So 3 confluence of 3 different data points coming together, making that a reasonable trade, which is why I was comfortable taking it. And my rules say, notice we went higher, right? So I could have gone for more points on that, right? Could have gone for 5 points on that. But my rules say that I take profits at the ATR, okay? Or a couple ticks below it. So the ATR is at the bottom left-hand corner of your screen. That's an indicator I use. And it's just my rules. So I was tempted to go for 5 points because I saw we got, basically these pullbacks, I measured them. That one was 9 points. This one was 5 points. This one was 6 points. So I'm like, yeah, we can probably go for 5 points, but I don't deviate from my rules. I follow my rules. So my rules say take the ATR. And as of here, we were at 3 points. Actually, as of here, I think we were 2.8 points. So I went for 2.5 points. Okay. Because that's what my rule said. And I executed my rules I executed my strategy according to my rules and procedures, and that's how you win in the long term. So that's my challenge. That's my test to myself is, can I do that? And I did. So there you go. One loss, one win. I'm interested to see what happens with the FOMC. That's here. See the red line on my chart? That's at 11. Okay. Did I mark it? Thought I marked it. I didn't mark it, but there's the FOMC report, which is here. Okay. FOMC. So that's basically like another trading day, right? Because that's going to move the markets big. In fact, that'll probably move the markets bigger than the CPI. I mean, maybe not, but I think it probably will. So let's wait and see what happens at 11. It's 9 a.m. Pacific time right now. And that's pretty good, right? I don't like to trade more than a couple hours because I get fatigued and then I start making bad decisions. It's a good way to lose money. So that's going to do it for this session. Thank you for being here. I appreciate you. And you got to understand, I'm really grateful for you. So thank you for joining me. We'll come on back. We do this every single Tuesday and Thursday at 7 Pacific. So if you had a good time, come on back. And if you want to get my 3 favorite trades, I'm happy to share those with you. Go to the link on the screen, tradesbybren.com/3setups. And you can get my 3 favorite trades. I'll tell you the patterns I look for, how I set my risk, how I limit my risk rather, and then how I take my profits so I can get out before it's too late. Hit the link in the description or go to the link on the screen for that. And have a great rest of your day. I'm Bren. Peace.